Welcome back to XRP Insider Network. This is the channel where real crypto intelligence lives. If you want the smartest XRP updates, institutional money tracking, and regulatory truth before it hits mainstream media, make sure you smash that like button, subscribe to the channel, and turn on notifications right now, because what I'm about to show you today is moving fast. Now listen closely. Bank of America, BlackRock, Vanguard. Three pillars of the traditional financial system just made quiet but powerful moves in crypto, and XRP is suddenly sitting right in the blast radius. This isn't hype, this isn't hopium, and this is definitely not coincidence. Something structural is happening behind the scenes, and most retail investors won't understand it until it's already too late. So let me break this down clearly, calmly, and without the noise. Because once you see how these institutions are positioning themselves, you'll understand why XRP keeps showing up in conversations it supposedly doesn't belong in. Let's start with Bank of America. Bank of America has never been anti-crypto. They've been anti-chaos. What they've been doing instead is studying blockchain infrastructure, quietly filing patents, testing internal settlement systems, and mapping how tokenized value moves through regulated rails. And here's the key detail most people miss. Bank of America has publicly referenced Ripple technology multiple times over the years, not as a speculative asset, but as a settlement layer. They understand something retail doesn't. The future of finance isn't about memes. It's about speed, liquidity, compliance, and interoperability. XRP was literally engineered for that. Now move to BlackRock. BlackRock doesn't chase narratives. BlackRock builds pipelines. When BlackRock entered Bitcoin through ETFs, people thought that was the end game. Wrong. Bitcoin is the on-ramp. Infrastructure assets are the destination. BlackRock's filings, partnerships, and tokenization initiatives all point toward one thing. They want programmable liquidity across borders. And that's where XRP keeps popping up, because XRP isn't competing with Bitcoin. It's solving a different problem entirely. Cross-border settlement, instant finality, minimal fees, and regulatory compatibility. Larry Fink didn't suddenly change his mind on crypto, he evolved his strategy. And then there's Vanguard, the most conservative of them all. Vanguard doesn't move unless the system is already changing. So when Vanguard exposure starts showing up indirectly through crypto-adjacent vehicles, you know the gears are already turning behind closed doors. This is the institutional playbook. First they dismiss, then they observe, then they position quietly, then they flip the switch. And when that switch flips, retail chases price, not access. Now here's where XRP becomes impossible to ignore. Ripple has spent years doing the opposite of what retail wanted. They didn't pump hype. They didn't chase influencers. They didn't launch gimmicks. They went straight to regulators, straight to banks, straight to compliance. That strategy looked boring until institutions started moving. Now suddenly the narrative is shifting. You're hearing phrases like tokenized real-world assets, on-chain settlement, 24/7 liquidity, and instant clearing. Those aren't crypto buzzwords. Those are institutional requirements, and XRP checks those boxes. Now pause for a second because this matters. If you're finding value in this breakdown so far, make sure you're subscribed. We don't chase noise here. We track capital. Here's the part that should really make you lean in. Regulation. The regulatory fog that once surrounded XRP is clearing, not because Ripple begged for approval, but because the system itself needs a compliant digital asset. Governments don't want anonymous settlement layers. Banks don't want unpredictable networks. Institutions don't want legal ambiguity. They want rails that work within the system, not against it. That's why XRP keeps surviving every cycle, not because it's loud, but because it's useful, and usefulness is what institutions buy. Now ask yourself this: why would Bank of America, BlackRock, and Vanguard all be increasing crypto exposure, while XRP continues to sit in the background, ignored by hype traders? Because by the time the headlines catch up, the positioning phase is already over. This isn't about tomorrow's price candle. This is about the next financial architecture. And XRP keeps showing up in the blueprints, but we're not done yet, because the implications of this are bigger than price. In the next part, I'm going to show you how this institutional shift could trigger a supply shock, why XRP liquidity dynamics matter more than market cap, and what happens when institutions stop watching and start using. Stay with me. This is where it gets serious. All right, Let's go deeper. Because once institutions move from exposure to execution, everything changes. Here's the reality most people don't understand: institutions don't trade like retail. They don't care about Twitter sentiment. They don't chase green candles. They build systems first, then deploy capital. And that's exactly what we're watching unfold right now. Tokenization is the bridge. BlackRock has already confirmed that tokenized assets are the future of finance. That means stocks, bonds, funds, and commodities moving on chain. But here's the problem: tokenized assets still need liquidity, they still need settlement, they still need instant conversion across currencies. That's where XRP fits, not as a speculative asset, but as a liquidity bridge. And when liquidity becomes utility driven instead of speculative driven, supply dynamics change permanently. XRP isn't endlessly inflationary. It doesn't rely on mining incentives. It exists to move value. So, what happens when banks and asset managers actually need it? Liquidity dries up fast. This is what people mean when they talk about a supply shock: not hype, not scarcity narratives, but usage pressure. Now, layer Bank of America back into this. Bank of America clears trillions of dollars daily. Even a fractional shift toward blockchain based settlement changes demand dynamics. They don't need all XRP, they just need enough consistently. And consistency is what moves price sustainably. Now, zoom out. Why would Vanguard tolerate crypto exposure at all? Because once financial plumbing upgrades, you don't opt out, you adapt. Email replaced fax. Digital trading replaced floor trading. Blockchain replaces batch settlement. And XRP is positioned exactly where friction exists. This is why the XRP story refuses to die. Every cycle, it gets written off. Every cycle, it survives. Every cycle, it integrates deeper into institutional conversations. And now the biggest asset managers on earth are circling crypto infrastructure. Not memes, not NFTs, not hype, infrastructure. This is where early conviction matters, not blind belief, informed positioning. Now, let me be very clear: this is not a guaranteed overnight explosion. Institutions move slowly until they don't. They test quietly, they pilot privately, they announce late, and retail usually finds out last. That's why you're seeing so much confusion around XRP price action. Price is lagging narrative. Narrative is lagging infrastructure. Infrastructure is already being built. And once that gap closes, moves become violent, up or down, but decisive. So, what should you actually take away from this? First, institutional crypto adoption is no longer theoretical, it's operational. Second, XRP isn't competing with your favorite altcoin, it's competing with legacy settlement systems. Third, when Bank of America, BlackRock, and Vanguard all move in the same direction, they're not guessing, they're aligning, and alignment precedes execution. If you're still here, you already understand this is bigger than daily charts. And if you want to stay ahead of this shift, not react to it, make sure you stay plugged into this channel. Because as institutions move from testing to deployment, the information gap becomes the profit gap. XRP doesn't need hype, it needs usage. And usage is exactly what the system is quietly preparing for. This is XRP Insider Network, and this story is just getting started.